So if you work a 9 to 5 or a 9 to 9, whatever that shift might be, you work overnight during the day, whatever that lifestyle is for you, or if you got to be a soccer mom and pick up the kids, drop them off, you got pickups, drop offs, all this other stuff going on, or you're an entrepreneur and your business is pretty much 24 hours a day because you got to be on call, whatever it is, you would be able to find 10 minutes to figure out how to build your routine around the charts, doing the same thing over and over again. But you wouldn't have 15 million different indicators on the chart. All right. Now we're going to get into the third scam, the third complexity scam with indicators. Professional traders use complex setups. Now, do they have access to computer and machine learning, AI, and things of that nature that we don't have? Absolutely. And what that actually does is allow them to not have human emotions around the parameters that they've set, where the computer will do it for them. Now, that might be complex, right? The computer, but not what they're specifically inputting into the computer, their parameters. That part isn't. Professional traders use the simplest setup possible. If they're looking on the fundamental side, they're reviewing that business like they're ready to purchase that business, period. If they're looking technical, more often than not, it's got to do with the price they believe that thing is worth, period. There's three main things: price action, volume, and support and resistance, which you can also call supply and demand, which makes economics work. It makes the world go round. It makes the money flow work for a business and a country. Those are the main three things. If you master those three things, every indicator you can just use as confluence, meaning just on top of those three things, because those are the things that are going to tell you what's going on with that particular stock, with that particular commodity, with that particular asset class. Complexity is a retail trader disease, not a professional advantage. It is not to your advantage to be out here creating this big behemoth monster that you can't manage mentally. Now, if you can code, if you can create your own bot and you can backtest using machine learning, AI, whatever it is, man, do your thing, because then it takes you out of the equation. But if you're just an average Joe who can't code or an average Jane who can't code, then at that point, let's just keep it simple, master that. And then once I've got it mastered, I've been trading this, back tested it, I paper traded it, and I've been trading it live and have over a 70% win ratio. And hey, I want to take that to 73, 74, 75% win ratio. Let me look at another indicator that could improve that for me. Or let me look at my risk management or my trade management that could improve my win-loss ratio by 5% year over year, just like a business. I didn't say go from 70 to 100. I said 70 to 75, because that could be thousands, if not millions of dollars for your account. The third point under this one: the most profitable strategies are the most boring strategies. And this is why it's a complexity scam. If I told you to simply mark on the chart support and resistance and then look at volume, and that's it, that's not sexy. That's not fun. What video thumbnail am I going to throw up there to say this is the only thing you need to trade? I mean, that thumbnail would get old after a while. But frankly, my entire course that I have, The Trader's Edge, is primarily dedicated to support and resistance. Teaching you price action, right? Teaching you trend, and then support and resistance. Because I believe if you have that, you can become a millionaire in the market. That's it. Doesn't cover 20 million different indicators. Just support and resistance. And the trade I'm going to show you today the chart setup that I'm going to show you today prevented me from getting into a trade that looked great on a lower time frame. And it's on Walt Disney. So ticker symbol DIS. So stick around to the end. I'm going to cover that analysis top to bottom and show you how I could have easily gotten into a buy and been wrong really fast, buying into resistance. So I'm going to show you that, right? Black's put in the comment, I'm learning the fib. It's one of my favorite tools, but it's technically not an indicator. It's a measurement tool. So if you wanted to measure a stock at $100 and it went to 125, the Fibonacci just measures. It's not even an indicator. Now, can you use other pieces of the Fibonacci to say, well, I think based upon this measurement tool, it could potentially go here, indicating where the price could go. Absolutely. But at its base level, it's just a measurement tool. If you're in TradingView, for all my TradingView fans, lovers, include myself, because to me it's the simplest platform to chart on. Are there more sophisticated platforms to trade on? Absolutely. But to me, TradingView is the simplest from your phone and your laptop. It uses regular left right clicking. Again, keeping it simple is everything. And I'm not saying don't use, and there's complication in TradingView, but as far as the user interface and clicking buttons, very simple, very normal, and translates to other programs that you would use in a Windows-based operating system or a Windows-based app or a Mac app. Simple. So if you're in TradingView or somewhere else, you'll see the Fibonacci is listed under the tools, not in the indicators panel. So it's a tool. And I love that you're learning it, Blacks. It's my favorite tool, period. Ask anyone. I've done courses and master classes on the Fibonacci repeatedly over the last 3 or 4 years. And I just actually started a new beginner's course for the Fibonacci in the accelerator community. We dropped the first edition. We'll have a second module go in there next month for the Fibonacci. Love it. Love that you're doing that, Blacks. If your trading setup requires a PhD in mathematics to understand, and you have a PhD, great. If not, you're not trading. You're not trading. The market rewards simplicity and consistency, which to me allow you to be disciplined. It doesn't reward complexity and confusion. Because if you can't repeat it over and over again, if you can't put in the reps like it's a free throw and you have the same rhythm and your thumb is in the exact same position, and then it rolls off of the three fingers, it sits on the pad, wherever that is for you. If you can't repeat it over and over again, I'm a basketball coach. If you can't repeat that over and over again, it's too complex and you need to remove something from the equation so that you can get disciplined in your routine, right? That's in the community. We're just trying to strip away all of the stuff, the craziness, just to focus on price action, market structure, then your risk management and trade management. Because once you get the charting down, most of your mistakes, most of your losses are going to come from your risk management and your trade management. But most people won't tell you that. I could literally have you just check or hit the buy or sell button literally randomly, like as if you were at the casino. And if you hit the proper risk management and proper trade management, you would be successful. Now, no, most people won't tell you that, because if you're managing your risk, you could just be roughly 51% accurate by randomly clicking the button buy or sell. But because you know how to manage a trade and you have the proper risk management, you don't blow up account and you can grow an account. That's key. And that's what we do in the accelerator community. All right. So, no, not talking about the RSI necessarily. I'm talking about indicators in general, whether that's the Bollinger Bands, RSI, stochastic. I'm trying to think the Keltner channels. I'm trying to think of all the different, the main ones you hear about all the time, right? I'm talking about indicators in general. Too many indicators equals confusion and analysis paralysis. Too many indicators equals confusion and analysis paralysis. You cannot duplicate a strategy that has too much going on or too many indicators to look at. So I'm not beating up the indicators. I'm beating up how many you use and how are you able to duplicate them, and do you fully understand what each of these indicators mean? Now, I did forget to mention at the very beginning, I'll take every live and I will break down a chart. I forgot to mention that. So anybody in the comments watching live, this is your opportunity to drop a chart and see me analyze it based upon what we're talking about today, which is the most simplest form of price action and chart analysis. So if you got a chart you want me to take a look at, drop it in the comments. After I go over the one I pre-selected for today, I'll select one from the comments and I will actually chart it with you all live. All right. So I'm going to let you guys do that. I meant to give you that opportunity at the very beginning. And now I'm going to pull up the chart that I wanted to cover with you today. And I already told you which chart it was. It's Walt Disney. Let me share this screen with you all. And right now, Tina's in the mix. She's going to get hers done for sure. And that's going to be Target. All right, let's go to the charts. So let's go up to the monthly chart. Now this is three things. Just three things, right, that I use. And I'm going to drop the RSI down for now. Three things that I use. I always start on a monthly chart. And currently, I'm looking for peaks and valleys on this chart, meaning a valley with more than two touches. And I'm just going to mark this chart for support and resistance. All right, so that roughly gets me close here. And then for now, that's going to be probably good enough. So I'm going to just leave. There's a couple other areas I'd mark as support, major support and resistance on a monthly chart. So I got roughly 122, 80, and 40. Those are 43, excuse me. Those are the prices for support and resistance. And I'm going to show you, just based upon this, how this saved me money, right? I'm gonna go down to the 1 hour and I'm gonna show you a trade setup that I was looking at. And I'm gonna go to about right here. And I'm going to hide this horizontal line for now, just for now. And this is what I was looking at, right? I'm watching price on the 1 hour, shorter time frame, make higher highs. 1, 2, 3 move is what we call it, but it's making higher highs. And then that would let me know I do want to be in buys, right, on the next pullback, okay? And as this was happening, let's say at this 121, I might be looking for a buy trade right in this area as price and the RSI are going up. So I might be looking for the buy trade right here. And on a 1 hour time frame, it went well for a couple of dollars. But as price continued to work, it rejected and went lower. It would have hit my stop loss in a matter of days. Now, this is where price currently is. And now all of a sudden on the 1 hour, we're making, let me do that right. We're making lower lows and higher lows. So within this period and this period, price action is going in two totally different directions. And then if you count this period, so one period we're going down, next period we're going up, next period we're going down. How do I know which one to trade? How do I know which one to trade and why is it doing this? Because in essence, I'm going to erase all the brushes here, all the yellow. When it's all said and done, I can look back on this now and say, oh, well, price was just trading sideways for the most part since July 1st. So most of the month of July was trading sideways. But why? Why? Why did I get caught up? Because I could have been in a trade down, right, and lost. I could have been in a trade up and lost, and maybe in a trade down without the proper risk management, trade management, could lose as well. If that makes sense. Right? Let me know if you're tracking with me. Drop a 1 in the comments if you're tracking with me. Now, I'm going to add back that horizontal line from the major support and resistance. This 122 price is why it's consolidating. It's why it's accumulating, because this is a major level for Disney. How big is this level? In 2015, August, price rejected this 121 level and then traded sideways from August 2015 to April 2019. That is 4 years. 4 years. Retested this and basically traded sideways for 4 years. That's major. It broke above and then broke through and came down and created this level at $80. Then it broke above, and I'm on a monthly chart, retested this level, and then created the 202 all-time high for Walt Disney, which would have been post-COVID. And then the bottom fell out. They had a whole lot happen at Disney. I'm not going to get into the fundamentals, but if you watch the price action, price broke below this 121 level and retested it right here in 2022. And it has been trading sideways again. Let's see for how many years. I'm going to use one of these measurement tools. I'm going to use the date range here. So from here to here, it's been trading sideways. So since August 2022 to July, basically call it, we're at the end of the month, to August 2025, 3 years, it's tested this 122 here again in 2024, and we're right back at the same point right now. I'm not saying it's not going to go and break out, because it could. It very well could, right? But right now it's stalled out. If we go down a time frame, once it got here, it spent 1, 2, 3, 4, 5 weeks right around 122. And this is the first candle that did not touch, as of right now, this week, has not touched that 122 price. Has not touched it, right? I'm just checking the comments. Drop a 1 in the comments if you're still tracking with me. That's how important this 122 level is. So I don't want to be in a trade against this level that's been rejected. And I've got history that it could stay below that for 4 or 5 years. I don't know. I can't predict it. But what I don't ever want to do is buy into resistance and sell into support. I don't want to buy into resistance and sell into support. I want to confirm price action above support, meaning I want to see on some time frame price make a 1 2 3 move showing me, and it doesn't have to be this far. Maybe you go down to the 1 hour, maybe you go down, yeah, maybe the 1 hour is the right place. I want to see price make a 1 2 3 move that I like, showing me that we're ready to trade away from 121. And then I would believe, in fact, that this thing is ready to go up. What I do see is a 1 2 move. And if it breaks below here, I actually have confirmation that this could be going lower. That is price action. Notice I didn't say anything about indicators other than to say if I was trading a short term strategy and I wanted to get in here, the RSI would have told me to get in, and I would have been met with a lost trade if I didn't have proper risk management, because it wasn't ready to go on a lower time frame. But because I have my major support and resistance levels marked on the monthly chart, I am able to see what's ahead, what's a potential danger zone for the type of trade that I'm trading, up or down. I'm not telling you where the market might go because I don't know. But if it breaks below this level, I would expect it to trade lower for a little while. If it breaks above this level, I would expect it to trade higher for a while. So if you're wanting to trade Disney, here are some prices for you. I'm going to tell you that you're going to want to look out for. 124.58. So a break above this previous high, or get rid of these so I can give it to you exactly, or a break below roughly 118.92. So those are the two areas that if you see the break above these two, you'd want to be in buys over 124 and you'd want to be in sells below 118.